Alright, it is Friday, June 9th. Let's go ahead and take a look at the price action and market changes in the indexes this week. Quick note, the futures contracts kind of changed over. Right now, for some reason, the September's contract is the most liquid, and so that one is being displayed and showing gaps on the chart that don't reflect accurate price action for the day, so we're going to be just using the SPX and the NDX to track those particular indexes going forward. But the TA is all the same as the futures contracts we covered last time, so let's go ahead and get into it. The S&P did kind of consolidate in this higher range that it broke out from in this upward channel that we saw last time. It is currently testing major key resistance at 4,300 on the SPX. I would like to point out that it is touching and sort of pulled back from the August high in 22. So that could be, and I'm not calling for this, but that's possible. It could be a double top formation, but just based on the price action alone, it does look like we could see higher. There is a daily level over here at around 43.90-ish, so we could certainly see that rally up into that range, absolutely. But in the near term, could kind of go either direction. We could see this kind of break a little bit higher and come back down. I don't want to call things extended, but we have had a pretty significant rally in the near term, and we may need a bit of a pullback before we can go higher. There is that support level at 4,200-ish on the daily on the S&P that we could see fuel another leg higher after a pullback. Of course, this all comes with the Fed decision next week that could create some volatility in the market in either direction. So for now, just keep in mind we are at this major resistance level. Could go anywhere, could break out, could retest down at the lows. Back at support, but for now, we need to see a little bit more.
Hey, can you turn the music down just a little bit? Yeah.
Just did there. Sorry about that.
That's nice right there.
Cool. So let's go ahead and move on to the NASDAQ. NASDAQ is again at this retested level here at about 14,500-ish. We have seen again some consolidation at this higher level. That to me actually signals that it could want to go even higher. Who could know if it actually will? I could see it going as far as 15,200-ish here, kind of retesting this local high right here from the previous downtrend. But if the tech rally continues, we could certainly see that move into that range. I think a lot of people are thinking that the tech is in a bit of a bubble right now. I'm not going to comment on that either way, but right now it does look like things could move higher. If you're a bear, you're going to comment on the fact that we see these topping tails here on the candlesticks, on these wicks on the daily chart. You're going to say that's bearish. We are at major resistance, so we could see lower first, but there has been some strength in the Qs recently, so this could easily go higher before we see a pullback. With that said, this major resistance level it's at has been tested in the past, so I would say that it's very likely that we could see this go higher. If you're a bull, obviously you want to see that. If you're a bear, you're going to want to see it pull back down into probably around this range down here at 13,600. The key takeaway here is that there really isn't any major support or resistance in the way of either move, so you could see this consolidation as picking up liquidity for a big move. So you're going to want to have a tight stop in either direction if you're going to want to trade right here at the resistance level. But we'll have to see some more price action next week before we can determine anything significant as to what likely move. Let's go ahead and look at the Russell. This is a little bit more interesting. We'd kind of pointed out this consolidation period last time that we were here, and we did see that start to break out at the end of last week, and we do see a continuation of that move. So this is good if you're a bull here. We do see sort of confirming a bit of a rotation into small caps for the stock market. But again, there are these really big ranges that the Russell is kind of traded in between for the last, I want to say, a year. approaching almost a year and a half. So we could see those ranges be respected here. But either way, recent price action is good for the bulls. They're going to want to see this continue higher and potentially break out above the 2000 here, 2000 level here. So this does look good for higher to me right now. You know, we'll have to see if that continues or not. But in the short term, it looks like the Russells is good for higher. It does need to break out of this range to actually continue though. So keep an eye out on the near the 2000 level, around 1975-ish. It's going to have to break out of that range to move higher. We'll go to the Dow. This one I haven't found an additional chart, so there is this gap here, but it is around 33,900-ish, a little bit over that today. Kind of breaking back into this area of resistance that we pointed out in the past. It's tried a lot of different times to kind of break out of that range and retest the major resistance here at 35,800-ish. If you're going to want to see that, you're going to have to break out of what looks like to be this 34,300 range. I don't have a line drawn here, but that is a key level that we've seen in that area of resistance. So that's going to be something that you're going to want to see break out higher. If you are a bear, you're really not happy about seeing any move up into this direction because you wanted to see this kind of lower low. You wanted this to be kind of a lower high, and then this kind of messed with that whole thesis. You're going to want to see this break. But right now it looks good for higher too, which you're going to see we're seeing a common thing with that on all of the indexes. But I wouldn't say the Dow's in any particular area of going to break out higher or going to break out lower. It's just in its range, kind of needing to find some support, or I'm sorry, some resistance if it's going to go lower. You could argue, if you're a candlestick trader, that this is somewhat of a head and shoulders pattern, right? A reverse head and shoulders pattern, in which case that also works in your favor if you're a bull, but we'll just have to see if that continues. You would need it to break out of that 34,300 range if that was to be the case. Let's go ahead and take a look at gold. Bit of an interesting chart here. We are seeing some consolidation around this old range of 1975 and 1940s. I personally think that we're going to see this go a bit lower before we see higher. I think it's very likely that we see this range broken to the downside, especially with the bullishness in the stock market. But we can see this go all the way down to 1875. And that would still actually be bullish if that continues as a higher low, right? So we've had the low here, right? And then a higher high, higher low, higher high, and that was retesting sort of the major resistance that it's failed to kind of break out of a few times. But you could still see that narrative play out of higher highs, higher lows, all the way down to 1875. If that holds up and moves higher, that's still good for potential breakout above that all-time high resistance level. So that's just kind of something to look at. I would personally think that this will hold up. I would take a long here with a stop probably below 1800 here, probably something like that, before that started to look like a bad idea. But I do think gold is going to break out higher eventually. It just needs to find some support before doing so. Could be here, but these are all tested support levels, so I don't think these are going to necessarily be significant drivers of newer highs, but we'll see. We still need to see some more price action before we can be sure. CL1 oil, this has been fighting for its life, so to speak, for a bit now. It's kind of played through this range for a little bit. It's toyed with this level right here at 73.50, and it looked like it wanted to break out and then just kind of retraced lower. It's really not a good sign if you're an oil bull. You wanted to see this breakout here and kind of break this consolidation. That is one thing that you'll notice here, is that there has been trading in somewhat of a tighter range in this area. So there is certainly a picking up of liquidity here, for whatever move it's going to make, and that could be down or up, but I think right now it looks like it's going to go lower before it sees higher. And when I say lower, I mean like zoom out even. The next untested support level, if that doesn't break above to retest this $80 daily resistance level, is all the way down here at around 54, right? So 53.82, 53.50-ish, somewhere around that level on the weekly. That's the next major support level. So it's going to go quite a bit lower before it finds any support if it can't break above there. So not looking great for oil right now. But again, we'll see what happens. There could be some major catalysts all over the market next week. Let's go ahead and look at the dollar index. This one's been a bit of a range market, right? So we saw it break back down to the 100s here, all the way back to around 105, even topping into this resistance level that it tested, and then coming back down to the 100s again, and then touching this daily level from back over here at 104.6, recently having tailed into that and coming back down. I do think that there is a possibility that we see it touch back to 103-ish. That says 102.96, but what I think is going to happen is that the dollar will likely move to the upside, but again, we still need to see some more price action before that happens. Right now we're seeing a bit of a pullback in the dollar though, so we needed to find some support before it moves higher. I do think 103 looks good for that. Lastly, we'll kind of talk a little bit more about KRE, the banking sector. Just a quick note here, we kind of touched on the fact last time that this was finding support after breaking out above this kind of key middle line here, this support and resistance, right? So here it was support, broke down below, became resistance, now it broke out above, and on the daily we do see now we're firmly above it, and we have 2 candles closed above that level, so that is a significant sign of potentially moving higher. It did kind of tap this $45 resistance level. That's more of a weekly level from back here. Then we saw that pull back, so it's going to need to find support again to move higher. Very likely that this $42 level is going to be used as that support level, but there is this consolidation area as well here that could be used for that. Oops, that's not a very nice looking one. Something like that. But until we see this kind of pull back to a support level and move higher, this needs to break 45, and then it'll actually have some moves up. And the key thing to take away here is if it can break this 45, then it doesn't really have much in the way of going back toward where it broke down from. So that could be a big move to look out for. With that said, I think that's pretty much good coverage for this week's price action. Again, I'm not going to make any predictions, but the Feds are meeting and kind of talking about their decision on rate hikes next week. So regardless of any decision, bullish or bearish, it's going to be a big move, I can guarantee that. So something to look out for, and be careful trading that if you're planning to. But thanks again for tuning in to Trader Hub Market Review. If you like this kind of content, we have our own Discord server, which is linked in the description. Discord server is kind of geared toward active traders or those who are interested in making trading somewhat of a hobby or actual income stream for them. So come in and pop in and say hi and share your trading strategies, and we'll see you on the next one. Take care, guys.